entrepreneurs. So we will go ahead and do a quick poll, and we'll launch that now. And there are two questions here. So our first one is, what is the most challenging barrier women entrepreneurs face in accessing financing to grow their businesses? So there may be a couple that come to mind, but we really would like for you to focus on the one that you think is the biggest challenge, and let us know what you think that is. And then our second question here is from the perspective of the financial service provider. So the question is, what prevents financial institutions from providing financing to women entrepreneurs? And I see a couple of answers coming in. We'll give folks a few minutes to respond to each of these questions. All right, we've got 20% of participants who have answered so far. So if a few more folks could just let us know what their thoughts are on this topic, that would be great. And I'll give it just another 2 minutes or so. Okay, now we're up to 30% participation. Just another couple of folks could answer, and then we'll end this and we'll move on. And if you've just, I think there are a few folks who've just entered today's session. So we're doing a quick poll. What is the most challenging barrier women entrepreneurs face in accessing financing to grow their businesses? And what prevents financial institutions from providing financing to women entrepreneurs? So I think in the interest of time, we'll go ahead and end this poll. And I'll go ahead and share the results. Let's see. And are folks able to see that? Okay, we'll come back to this in a minute. Okay, so we'll come back to the results in a bit, but I wanted to get us started talking about what gaps exist when it comes to financing women entrepreneurs. And first, when we say that women entrepreneurs lack access to finance, I think it's very important that we quantify that. And we know that formal women-owned and led micro, small, and medium enterprises across emerging markets and developing economies face a $1.9 trillion credit gap. Second, that gap widens as women's businesses grow, right? So when you look at the micro enterprise segment, women represent 24% of that financing shortfall. When you talk about slightly bigger businesses or medium businesses, you're talking about 33% of that shortfall. So as the businesses grow, women are facing increasing gaps in access to the financing that they need. And lastly, while these two statistics are focused on formal MSMEs, the estimated credit demand for the informal sector is $2.1 trillion. And we know that we don't have a specific figure that we can cite in terms of the breakdown of that 2.1 trillion. But what we do know is that, especially in certain markets, and I'm thinking here about Africa and in Asia, there are a concentration of women-owned businesses in the informal sector. And in some cases, that percentage is as high as 80 to 90% of businesses. So what we know here is that the credit gap faced by both informal and formal micro, small, and medium enterprises, either owned or led by women, is quite substantial. So what are the opportunities? That's kind of some staggering numbers. And here I'd like to highlight some of the opportunities that exist if we were to close that financing gap that exists for women entrepreneurs. And let's look at this from two different perspectives. So on the one side, globally, estimates are that $5 to $6 trillion in net value could be generated in the global economy if barriers were eliminated and women were empowered at the same rate as men to grow, to start and to grow businesses. We also know that more would be spent on things like home improvements, education, health visits, and quality meals. And in addition to the gains that we could have both economically or society, as a society, there's also the perspective of the financial service provider. And here, the estimate is that $700 billion in annual revenue could be gained by financial services firms across the globe if they were able to more fully meet the needs of women customers. Right. And that's bolstered really by two things. So we've seen that loans to women-owned micro, small, and medium enterprises consistently perform better. They have lower NPLs compared to the total MSME loan portfolios of financial institutions. And second, and this is data specifically related to small and medium enterprises, the deposit size, so their savings tends to be larger than the average SME. So this represents really a huge opportunity for both society, for the global economy, as well as for financial service providers. So let's talk a little bit about the barriers that women entrepreneurs face in accessing finance. This was the first question of our poll. And as you can see, we have quite a number here. And I'll go through each of these briefly. So first, and I think that folks have heard this one for a long time, there are higher demands on time and more limited mobility due to caretaking and household responsibilities. Women also face restrictive gender norms. So, for example, that could be restrictions specifically on working outside of the home or on operating businesses in male-dominated sectors. In some markets, there are prohibitive legal requirements. So, for example, that could be something like requiring the husband's signature on a business loan. That would present a huge barrier for women entrepreneurs. For a variety of reasons, women's businesses tend to be smaller. And as I mentioned before, they may be more likely to be in the informal sector, depending on the market. Women face challenges in meeting traditional loan requirements. So one thing that comes to mind is collateral. That's often a big issue, as well as credit history. So having sufficient credit history for a bank to consider their loan application. Women-owned businesses tend to have a more irregular cash flow. And then speaking specifically about the women entrepreneurs themselves, so you're facing things like lower levels of education and financial literacy, a lack of networks and mentorship, right? So that makes navigating kind of the financial sector and the different products and services available a little bit more complicated if you don't have folks to talk to and to learn from who have been through a similar situation. It also affects things like access to markets. And then finally, even when there are the products in place, even when they are tailored to support women and overcome some of these barriers, you may have perceived difficulties or a fear of being rejected by a financial institution. That there's plenty of data to support, unfortunately, that is another barrier that women entrepreneurs face. As I mentioned at the beginning, this may seem like a lot of barriers, and that's true. There are, but these can be addressed, right? Some would require a intervention from the government or the regulator. Others can be addressed by societal change, right? So when we're talking about things like restrictive gender norms, but there's plenty that financial service providers can do and ways to tweak their offers to the segment, and we will get to that in a bit, as well as hear from Crystal on their experience in that space. Whoop. And give me just one second. Sorry about that. I think we've lost the slide that we needed here. Okay. And now, so focusing again on the financial service provider, what barriers do financial institutions face in providing that financing for women entrepreneurs? First, there's the belief that, and I've heard this many, many times, and with the institutions that I've had the pleasure of working with, that there is this belief that gender neutral means equal access for all genders, right? So we hear frequently our products and services do not exclude women; they're available to everyone. Therefore, they're gender neutral. And the challenge here is that if your products and services are available to all, that does not mean that they are actually gender inclusive, right? So they might be designed for all, but if they're not designed with women in mind, they may be unintentionally excluding them because they're not considering the unique behaviors, the unique needs, and the unique preferences of women entrepreneurs, right? Second, there's gender bias that exists in the way that services are provided and the ways that loan applications are assessed. And just briefly here, one example that always comes to mind when I talk about this is in working with an institution. I remember training frontline staff and showing them two pictures. So one was an auto mechanic business that was run by a man, and the second was an auto mechanic business run by a woman. And the businesses looked more or less the same. Ages of the business owners more or less the same. And we asked the folks in the room to share with us who they would go and market the business loan to. And by and large, the answer was the man auto mechanic. And we explained that the woman actually had undergone a vocational training program. She was extremely well qualified. And at that point, a few folks changed their minds, but not everyone, right? And I bring this example up just to highlight that we have to think about all levels of the institution, right? Because a bank might have the products and services in place to serve the segment. They might really see the need to do it and see the value in it. But if frontline staff are exhibiting this gender bias, it means that women customers are not even being approached. And next, we have here the collection and usage of sex disaggregated data. The first step, I think, is really defining what a woman-owned business or a woman-led business is for a financial institution, and then applying that definition and doing so consistently, right? This is a big one. Sometimes it's easier for the micro segment to say, okay, we have the sex of the borrower, and we know that these are women and we know that these are men. But the challenge then becomes if the business has multiple owners, how are you determining whether or not that business is woman-owned or woman-led? All of these sort of wrap up into my next point, which is a misunderstanding of women entrepreneurs' needs and preferences. We will cover, I'm not going to go into this too much because we will cover this in our webinar in November. So I'll do a quick plug for that. That's going to be focused on women-centered design and precisely this point. And while I won't go into detail on this, I would like to just mention that even the most well-intentioned and thoughtful financial service providers who are very present in the market and with this segment may not get this right if they do not speak to customers, right? So you want to hear directly from your customers or your potential customers what it is that they're going to need. We've also seen a focus on collateralized rather than cash flow or character-based lending. As I mentioned in the previous slide, women often face a barrier in being able to provide the kind of traditional collateral that banks are or financial institutions are looking for. And then finally, and this is meant to really sort of sum up these other barriers, if you don't have the right data, you don't understand how many women you're serving and how well, if you are focused on collateralized lending rather than on understanding the business and how it operates, what happens is you're really failing to see the business case for serving women entrepreneurs. So it's not all doom and gloom. We want to next highlight here some of the strategies for financing women entrepreneurs. So here, based on experience, we'd like to propose for you 4 areas for consideration. The first being strategic commitment, right? So making sure that there is a dedicated strategy or mandate at the institution, that it's not just something that's nice to do, that it's not just one person, but that it's something that the whole institution is committed to and sees the value in. That relates to the second point here, ensuring buy-in from leadership all the way to your frontline staff who need to go and market your products and services. And one helpful way to do this that we've seen is to train staff in gender sensitization and equity. So really helping folks understand the point that I made, which is that just because your products and services are available to all customers does not mean that it's something that those customers can actually access or that they're interested in accessing, right? So understanding the differences between equality and equity there. Second, focus on data. So use the data to understand existing gaps. And if you don't have a definition for SMEs, women-led or women-owned SMEs, that may be a little bit more challenging. But at least to start with, who are we currently serving within this segment and how well are we serving them? If you don't yet have a definition for a woman-led or woman-owned MSME, create that definition, make sure it's socialized throughout the organization, and then build it into your IT systems. And that's a very, very important one. And finally, on this piece, identify KPIs, key performance indicators, track the progress, and then report it out at regular intervals. Because if you're not sharing the progress that you're making in this space, folks are not going to continue to think that it's something to be interested in from a business perspective at the financial institution. Build a tailored proposition, so implement cash flow and character-based lending. Introduce a relationship management model. So that's another important one for women entrepreneurs. Often they have shared that they do not want to have to go to a bank and share their story over and over again each time, but they really want one person that understands their business and their needs. And offer non-financial services like training, facilitated networking, and mentoring to complement and enhance their usage of the financial products you offer. Lastly, here, cultivating partnerships. So utilizing external consultants for customer research is always helpful because customers will often share with outsiders a little bit more than they might share directly with the bank. If you don't have the expertise in-house for non-financial services providers, so non-financial services, look for providers you can partner with and programs that you can leverage. Collaborate with women's associations, NGOs, accelerators, so they can help both give you a sense of what it is that your women entrepreneurs need, but also serve as a way to market and disseminate information. And then finally, seek out risk sharing mechanisms like credit guarantees or specific risk sharing facilities. And I have just one more quick slide before we move over to Lika from Crystal to hear from her experience. And I just wanted to highlight there are three key drivers for success. So the first one, identify. And here we're talking about identifying internal champions, assembling a project team with clear roles and responsibilities, and then involving key stakeholders at regular intervals. The second is iterate, right? So even if you've successfully managed to build out each of those four pillars that we just talked about on the last slide, markets change, needs change, and so you're going to need to continue to engage your women customers, continue to engage your staff, and use their feedback to tweak the products and services on offer. And then finally, and this is an important one that comes up quite a lot, is planning, right? So especially if you're partnering with a donor or you're partnering with another institution or another organization, think about how to ensure your offer is going to be financially sustainable. And on this one, especially think about the ways that you can leverage some of the financial gains from better serving women entrepreneurs to fund the kinds of initiatives like non-financial services that will help you serve them better. And I will stop there and we will move on to a discussion with Lika Salukvadze from Microbank Crystal in Georgia. Microbank Crystal is a leading financial institution in Georgia and an investee of the Global Gender Smart Fund. Lika is corporate social responsibility specialist at Crystal, where she has been involved in initiatives that integrate women's economic empowerment, environmental sustainability, and CSR ESG practices across the company. She is also a facilitator for programs that strengthen women entrepreneurs' skills and advance inclusive finance. Lika, thank you so much for joining us today.
Thank you, Veronica, very much, and hello, everyone. It's really a pleasure for me to be here, and also I would like to share to you, Veronica, that your presentation was really interesting and full of useful insights. Let's get started for
Perfect. Thank
sharing
you. So,
Crystal's
Lika, tell us
useful
about,
efforts. Okay.
thanks so much. Lika, tell us about Crystal and really what ignited the institution's initial drive to champion and invest in women entrepreneurs.
Okay. Let's start by briefly introducing Microbank Crystal's story. As you mentioned, Crystal is a leading microbank in Georgia with a 30 years history, serving more than 100,000 clients and employing over 1,000 people across 47 branches nationwide. And since Crystal's establishment, company's mission was and still is to empower micro and small entrepreneurs by promoting entrepreneurship in a financially, socially, and environmentally sustainable manner. And let's talk about our stories, like quite special. Crystal was founded by young internally displaced persons from Abkhazia, a region that remains under the Russian occupation. And from the very beginning, our founders deeply understood what it means to rebuild lives, strengthen communities, and create opportunities for people who have been left behind. So Crystal realized early on that true progress is impossible without empowering families, and that, of course, means empowering women economically, mentally, and financially. And because strong women build strong families, and strong families build strong communities. So we confidently say that inclusion has been part of Crystal's DNA since day one. And from the start also, I would like to mention is that we worked with international partners and investors from Europe and USA. And through this long-term collaboration, Crystal gradually strengthened its operations in line with international best practices and social performance standards. And also, it should be noted that this continuous learning process has helped us refine our systems and positions. Crystal is a supported company and leader in inclusive finance in Georgia. And over time, this vision evolved into a clear understanding that sustainability progress requires visionary leadership that intentionally invest in women's empowerment. And that beliefs continues to guide everything we do today. Yeah.
Thanks, Lika. It's a very inspiring
Thank
founding
you.
story and to hear about how the institution continues to be guided by many of the same or by the same mission and similar
Yeah.
values. Can you share with us, because I'm sure there are lots of financial service providers online and folks are always interested in numbers, though it tends to be the thing that folks share the least. Can you talk a little bit about the institution's loan portfolio at the
Mm.
outset, right? So when the institution started this journey, what was the balance like between male and female borrowers?
Okay. Mm, um, 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 from the very beginning, and now, of course, Crystal has been providing equal access to financial services for both women and men customers, ensuring that everyone has the opportunity to grow their business and improve their livelihoods. But over time, as the company grew and adopted more advanced approaches to inclusive finance, we began to look deeper to understand the specific needs and behaviors and challenges faced by women customers. And this leads us to gradually refine our gender and sustainable strategy and to get more intentional and data-driven approach to inclusion. And I would like to place particular emphasizes on the gender gap we observe between the characteristics and opportunities of our female and male customers. Almost every year, Crystal's customers and loan portfolio data highlights these differences. I would like to mention it. We consistently have more women clients than men. However, data is also shows that while the number of women clients exceeds that of men, the total loan volume for women remains lower, meaning that women tend to take smaller size loans. We have this kind of tendency. This is not a Crystal specific issue, but rather than a global trend. And this survey, this data is supported by both local and international financial researchers too. But yes, and we know that women often show greater caution when it comes to large financial commitments or major business decisions, and mostly a tendency largely linked to lower financial confidence, maybe sometimes limited ownership of assets and fewer opportunities for financial education and business experiences. And recognizes this persistent gap, Crystal made a strategic decision to respond proactively by designing women empowerment programs, non-financial products, and partnerships that help women overcome these barriers and strengthen their financial independence. And I would like to mention that recognizing this, Crystal began taking systematic steps to empowering women, and since 2018 has embedded Sustainable Development Goals (SDG 5), gender equality, and SDG 10, reduce inequalities, as a core strategic goals.
Thanks, Lika. And how, so have you noticed, I think you mentioned that consistently you've seen that you have more women clients than men, but that the loan volume is lower. Have you seen any changes in that over the past few years?
Oh, yeah, I want to repeat this. That for example, by 2020, the number of women borrowers grew even further. It was at almost 60%, and again, the loan volume increased. But and the same situation we have at 2025 years, but increased number of loans, but the volume size not very much. And what does it mean in practice? It means that more women are using financial services, which is a positive outcomes of our inclusive strategy. Yet they tend to take smaller size loans on average compared to men. And yeah, we have the same situation, but we are trying to empowering them. And it's not. This dynamic reflects what many global studies also highlights that women entrepreneurs are often more cautious about taking large financial risks. And what we take from this, however, is not just like the challenge, but also opportunity to, because to growing number of women clients shows there is a strong trust in Crystal, and our focus now is to help these women move from access to growth, to build their financial capacity, scale their businesses, and close remaining gaps in loan size and investment confidence. Um, yeah, yes, it's clear that women demonstrate higher. And I would like to add something that, based on the researches and surveys, is women demonstrate higher repayment discipline and strong responsibility. Yeah,
Perfect.
and it further reinforce the case of investing in women entrepreneurs. Yeah.
Sure. And Lika, yeah, the point that you made about this situation not being specific to Microbank Crystal, that is absolutely the case. The difference between the number of women clients that a financial service provider serves versus the volume of the loans that they're asking for, or, which is another important point, the volume of the loans that they are actually receiving, right? And again, just that drives home the point about data, right? So tracking these things and seeing what these numbers look like and how they change over time. So you mentioned to us, that Crystal is really focused on empowering women entrepreneurs at this point in time so that they can grow their businesses and potentially increase the loan sizes that they are asking for or the loan sizes that they are being approved to receive. So can you talk a little bit about that kind of programming and what some of the success factors you've seen so far in that space are?
Okay. I would mention the key drivers of this change. Did I start it from here?
Sure.
Yeah. We Crystal's progress has been largely driven by data, partnership, and customer research. And in 2023, Crystal issues the first ever gender bond in the South Caucasia in a partnership with the Asian Development Bank. 25 million issuance gel dedicated for financing women entrepreneurs. And we also implement a nationwide women empowerment program, BAS Women Georgia, as a local franchise of the Netherlands-based BAS Women Global. And through these initiatives, we have reached over 5,200 women plus with training sessions and workshops, and both in person and online, and strengthen their confidence, financial literacy, and entrepreneurial skills, while also building community networks and peer support. Also, I mentioned, but again, I repeat that we conduct annual social impact studies with international consultants and assessing both by male clients across business and household indicators. And these gender disaggregate studies help us to identify specific challenges and opportunities, guiding us to align our sustainable business model. And ultimately, impact research and data monitoring have been the most best tools to stay close to our clients and understand what actions are needed to build a more inclusive and sustainable environment. Yeah.
Thanks, Lika. In the interest of time, I think we'll move a little bit more quickly. I have just a couple more questions for you. Can you talk a little bit? So you talked about the drivers of success, and the last one you mentioned, for example, I'm glad for it because I've been making the point about data, and you're talking about measuring and evaluating that change. Can you talk just very briefly about a couple of the challenges that Crystal has faced in financing women entrepreneurs and how you've worked to overcome those?
Oh, okay. Yes, to Crystal challenges, it was like that. Um, how I can say, women having, as we know that in many regions, women are having low financial confidence, limited actions to assess the collaterals, and less experience with long-term financial planning, especially as we know in rural areas. And also, as we observed, women's decision making is shaped by family and community priorities too. They avoid to prefer to avoid financial risks that might affect household stability. Um, and to address this challenge, Crystal integrated women's empowerment components in our consulting and mentoring and training programs. And we are starting to boost their confidence, improving financial literacy, and encouraging women. Um, and see like financial support not as a burden but also as a tool for growth and independence. And step by step, we see that women are more applying for business loans in the last year and scaling their enterprises and becoming role model within their communities. Yeah.
So it sounds to me like the really the key piece has been focusing on women's empowerment messaging, incorporating that into the non-financial services that you're offering. And it seems like it's showing dividends. So you're actually seeing more women applying for loans and hopefully being approved for. for those so that they can grow their businesses. Just in the interest of time, I'm going to pivot to kind of our last question, which is, so you all are experiencing success in serving women entrepreneurs, particularly with finance and non-financial services. What advice would you offer to other institutions that are at different points in this journey?
Okay, what I would like to highlight is on Crystal's experience and my experience. Start with data. Understand your client base, collect and analyze gender disaggregate information. And data is a foundation for any real changes. Build partnership, work with organizations that have deep roots in women communities regionally. They know best how to reach and inspire local women. They are very big helper in these cases. And secure leadership commitments, I think that one is. Gender inclusion must be a strategic business priority, not just a social project. Leadership buy-in ensures sustainability. Um, Invest in non-financial services, combine credit with mentoring, networking, capacity building. That's where the real transformations happens. Avoid tokenism, I think. Don't treat women's finance as a side initiative. Make it part of your institution's culture, performance metrics, and long-term visions. And finally, listen to women. They know their challenges. They have solutions when given the right support, and they strive. They, their families thrive, and entire communities grow stronger, I think.
Great. Thank you, Lika. And you highlighted some points that I already mentioned. So I'm very happy to see that we're well aligned, particularly on data, on making sure that serving women entrepreneurs is not just a side initiative that folks think of as something that's good to do for the community, because there really is a business case for doing this. And finally, talking directly to women entrepreneurs. And I've seen myself recently, even institutions that are very closely have a close relationship with their customers sometimes get the pain points wrong, right? So they might think, okay, women need this particular product or service because they're facing this particular issue. And when you actually speak to the women customers, come to find out that it might be a little bit different. And so the really important thing is to talk to the women entrepreneurs directly to see what it is that they need, to see what their unique contexts are, and how you can best serve them as an institution. Um, Thank you again, Lika. And I just want to briefly open up to questions from the audience before we wrap. We've got about a 10 or so minutes for that. So we'll give folks just a second or two. And you can either put I think probably the easiest would be to go ahead and put any questions that you have in the chat. And in the meantime, I am able now to access, I couldn't see this before, but I am able to access the results of the poll. So let's see how folks did. So for the first question, what's the most challenging barrier women entrepreneurs face in accessing financing to grow their businesses? Most women think financing is a man thing. They don't want to be the debtor. Lack of credit or collateral, no collaterals coming up here. A couple of actually, for the most part, lack of collateral, and then I have a lack of network. So yes, a couple of those we flagged in the slides in the presentation. And then what prevents financial institutions from providing financing to women entrepreneurs? So we have lack of insight into the field of women-led businesses. So this speaks to what Lika and I both mentioned around talking to your women customers to see what it is that they need and require. Gender role dynamics, so talking more about the social norms. Uh, Credit history, collateral, business vintage, equity capital. So the things that the financial service provider are looking for, it sounds like are things that you're flagging may not be able to be met by the intended segment. Scale, complex procedures, and then distribution costs to the last mile, right? So we did talk a little bit about limited mobility being a potential barrier for women entrepreneurs to access financing. So things like figuring out an agent network or making sure that you have sufficient staff that are able to actually approach the customer. And that's another important one. And I do see a question coming in the chat. Has this fund explored, or would it be in a position to explore investing in the growing field of savings group specific products? This space is ripe for growth and bakes in many of the best practices lighted in this. Great, thank you, webinar, Sarah. Thanks for your question here. Etienne, or Nawal, maybe this question is best positioned to one of you. So I'm sure you can see that in the chat. Do you mind just hopping on and answering?
And thanks, Veronica. Thanks for the question. No, I think that's an interesting question. I think it's definitely something that we should look into. Right now, we don't have a specific strategy for this or products that's tailored to this, but it might be worth exploring further indeed.
Sure. And Sarah, with the technical assistance component that's sometimes provided to the investees, there are a couple of activities that are focused on looking specifically at the products that are offered by the institution. So a product audit to see what's currently on offer and how well that meets the needs of the women entrepreneurs and building from there. So that's another area that we can consider. Perfect, Sarah. Yep, we've got your email. So happy to follow up offline. Any other questions from folks on the line about either Crystal's experience or just more generally about financing women entrepreneurs? Okay, so we'll keep the chat open, and if anyone has anything that they'd like to pipe in with, that is no problem at all. We will do just a quick evaluation of the webinar, so there'll be a poll that'll be launched just for you to go ahead and rate how helpful this was for you, for your institution. And then I also just want to share one more thing with you before we wrap up today. And that is, as I mentioned at the very beginning of the call, this is part of a 5-part series of webinars that we're doing for the Global Gender Smart Fund. And the first session we had, which I'm sure that you can access a recording of on our website, was held September 16th on the topic of From Bystanders to Allies Beyond the Business Case. We had today's session on financing women entrepreneurs. We'll also have another session later in the day today with another investee. So Banco de Loja in Ecuador will be joining to talk about their experience with a particular initiative that they've launched called Influye Mujer. We will have, and I highlighted this earlier, next month, so this will be November 18th, led by my colleague Pallavi, gender responsive products. So this is going to focus on that piece that we talked about in terms of really understanding the preferences, the needs, the contexts of women entrepreneurs, and taking that understanding and designing products and services that are going to actually be something that the woman entrepreneur can access and that she's interested in, that will remove a pain point or reduce a pain point from her day-to-day. Then we'll have January 20th, a session on gender data, right? We talked a lot about data today, how important it is to just get a baseline of how well you're serving women entrepreneurs, and then making sure you've got a definition in place and that you are tracking key performance indicators and serving the segment. So that'll be the focus of this session, gender data, assessing progress and tracking impact in imperfect systems. And we know that this is often one of the trickiest parts of implementing a new proposition is figuring out how you're going to track the data that you need. And then finally, we'll have a session February 2nd, Gender Lens Investing, the Catalytic Role of Regulators. And we have included a QR code here, so you can go ahead and scan that and sign up for any one of the sessions that are upcoming either next month or at the very beginning of next year. And I'll just check one more time to see if there were any questions from the audience. And if not, I think thank you so much for joining us today, for also filling out the satisfaction survey. Lika, again, thank you very much for sharing the experience of Microbank Crystal. And as I mentioned, we'll have another session later today that'll be featuring another investee of the Global Gender Smart Fund. So we hope to see you there. Thanks, everyone.
Thank you very much, Veronica. Thank you, everyone.